What's going on, everybody? This is Demetrius Harris, your DAC funding broker, and on this channel, I help business owners get access to funding in all types of industries. If you own a construction company and you have ever wondered why some contractors get approved for funding while others get denied, this video is for you. Before we get started, make sure you like, subscribe, and hit the notification bell for more funding content. Let's get into it. A lot of construction business owners think getting denied funding means their business is not good, but that is not always true. In many cases, strong construction companies get turned down because of how lenders look at cash flow, deposits, debt, bank activity, and business stability. In this video, I'm going to break down the real reasons most construction companies get denied funding, what lenders are really checking, common mistakes contractors make, and how to put your business in a stronger position to get approved. Let's start here. A lot of construction companies do not look into funding until they really need it. By that point, payroll may be tight, materials may need to be purchased, equipment may need repairs, and a growth opportunity may already be slipping away. That is why understanding why denials happen is so important. If you know what lenders are really looking at, you can correct issues early and improve your approval odds before the pressure gets too high. Construction businesses deal with large expenses up front. You may need labor, equipment, fuel, trucks, insurance, subcontractors, and materials before the full money from the job comes in. That creates cash flow pressure even when their business is active. Because of that, lenders often look at construction companies very carefully. They want to know if their business is stable enough to handle funding without putting itself under too much financial strain. One of the biggest reasons construction companies get denied is inconsistent revenue. Lenders usually want to see steady business deposits hitting the bank account. If deposits are all over the place, or if there are large gaps with little activity, that can create concern. Even if the company is working on jobs, lenders want to see consistent money flow. The more stable the deposits look, the stronger the business may appear from a lender's perspective. Another major reason for denial is poor cash flow management. A construction company may be generating revenue, but if their business account shows too many negative days, tight balances, or signs that money is consistently running low, lenders may see that as risk. They want to know if their business can actually support a new payment. Cash flow pressure is one of the biggest reasons otherwise solid contractors get declined. One thing that can hurt a file fast is too many overdrafts or negative bank activity. If your bank statements show repeated non-sufficient fees, overdrafts, or poor account management, lenders may assume the business is under too much pressure already. That does not always mean there are no options, but it can reduce approval odds and limit the strength of what may be available. This is one of the most common issues contractors overlook. Another reason many construction businesses get denied is because they already have too much debt. If the company has multiple payments going out every month, lenders may question whether the business can handle another one. Even if revenue is decent, heavy debt obligations can weaken the file. This is why stacking too many advances or loans can make future funding harder. Time in business matters. A company that has been operating for a longer period often looks more stable than a company that just started. That does not mean newer construction businesses cannot qualify, but limited operating history can reduce the number of options available. Lenders want to see that the company has been active long enough to show consistency and survival in the market. A lot of construction owners get denied because they do not fully know their numbers. They may not know average monthly revenue, their real operating costs, current debt load, or exactly what the funding will be used for. Lenders want to see a business owner who understands the business. If the numbers are unclear, the file can look weaker than it should. Another issue that hurts contractors is mixing business and personal finances. When business money and personal spending are all running through the same account, it becomes harder for lenders to clearly see the strength of the company. That can create confusion and make the file look less professional. Clean business banking makes a big difference. Sometimes the issue is not the business is weak. Sometimes the problem is the owner is applying for the wrong product. If you need working capital for payroll and materials, that is different from equipment financing for a machine or truck. If you apply for the wrong funding type, the business may get declined, and even though another option might have made more sense. A lot of construction business owners assume denial is always about credit. Credit does matter, but it is not always the only factor. Lenders often look at revenue, deposits, bank activity, and overall business strength too. A business with imperfect credit may still have options if the rest of the file looks strong. But if credit is weak and cash flow is weak, the denial risk goes way up. Construction is not like every other industry. Job delays, weather seasonality, change orders, material cost swings, and labor shortage can all affect how stable a company looks. Lenders know that, so when they look at construction companies, they often want stronger proof of stability. That means contractors need to be even more organized and even more prepared. One of the biggest mistakes construction owners make is waiting until the business is already under pressure. They wait until payroll is due, equipment has broken down, fuel costs are piling up, or a project needs materials immediately. At that point, the file may already show stress. The smarter move is to look at funding before the business is in a crisis. Let's say a contractor is bringing in money, but deposits are inconsistent. The bank account has multiple overdrafts. There are several existing advances, and the owner is not clear on how much is needed or what the funding is for. That file may get denied, even if the company is active. The issue is not always the work. The issue is how the business looks on paper and in the bank. Now, let's say another contractor has steady deposits, cleaner bank statements, fewer overdrafts, organized records, clear revenue numbers, and a specific plan for using the money for materials, payroll, or expansion. That company is usually going to look stronger to a lender. This is why preparation matters so much. If you want to improve your chances, start by keeping deposits consistent. Separate business and personal finances. Reduce overdrafts. Know your numbers. Keep records organized. Understand your current debt. Be clear on what the funds will be used for, and try not to wait until the business is under severe pressure before applying. These steps can make a major difference. At the end of the day, getting approved is often about positioning. Two companies may both be busy, but the one that looks cleaner, more stable, and more organized usually has the stronger shot. Lenders want confidence. They want to see a company that looks active, manageable, and financially aware. Most construction companies do not get denied because they are bad businesses. Many get denied because their numbers, bank activity, debt load, or presentation of the file do not give lenders enough confidence. The good news is a lot of those issues can be improved. The more you understand what lenders really check, the better your chances of putting your business in position for approval. If you own a construction company and want to understand why most contractors get denied funding and how to improve your approval odds, check the link in the description to see what options may be available for your business. And make sure you like, subscribe, and hit the notification bell for more funding content. And I will see you in the next video.